In fact, let's get our market master in now. Andrew Holland of Ambit Capital joins into our discussion on what is turning out to be quite a strong day of trade. Andrew, hi, good morning, and good to have you on our show. It just brings me back to, or rather takes me back to the report you wrote in September 2013, where you said that this could be the start of a bull market. In fact, 2014 is the year to reckon with for India. Has most of the easy money already been made? Has most of the juice already been eked out of this market, or do you see a lot more on the upside from here on?
Fortunately, having the foresight to have said that in October, it's easy now to kind of sit back and say that that move has been made. But I don't think it has, because if I looked at the data at the end of March, April, and most foreign investors and domestic investors have not really made the switch towards cyclicals, and I think that switch will continue now for the next 6 months. Away from defensives towards these sectors. So that I think there's a lot to play out here. Whilst we're quite happy sticking with the cyclical sectors we have, this is a defining moment. This is a moment for India. And really the key now is, and I'm sure you're going to ask me what you think the index is going to do. And to be quite honest, I'm not thinking about the index. I'm trying to fast forward, although not too quickly because I want to enjoy the ride, to what India is going to look like in 3 years. So if I can get the key themes now, and invest in them, and we have identified some key themes outside of that cyclical theme, which we think will play out over the next 3 to 5 years. We think that having that foresight now is where we need to concentrate, rather than thinking about where the index will be in 2 years' time, because you're going to make a lot more money on this theme than you are just on playing the index. So that's where we're concentrating our efforts at the moment, and identifying the right companies to play this through.
Hi, good morning, Andrew. Can you develop that theme further? Rather than the index, which are the stocks you would concentrate on? Because, there is this unusually big rally that we have seen in banking stocks. State Bank breathlessly moved, and people are now upping that target to well over 3,000. So, which are the outperformers according to you?
Yeah, you see, I think everything's going to be washed up altogether in the next few months. Tonight we got obviously we'll find out who's taken over the government post, and then we'll look forward to the budget and expectations. I'm sure we'll run high on that. So the index can go higher. There's no doubt about that, but I think once we sit back and understand that there's still a lot of heavy lifting to be done, then we'll start to separate the real kind of winners going forward. So we're just, as I said, we've identified the theme which we think will play out over India in the next 5 years. We're now identifying the stocks and sectors which will benefit from that. So we're quite excited about that prospect. I'm not of the view that PE multiple expansion will happen in India. I know a lot of people are saying this because I think the defensive sectors will be derated over time. I'm not saying share prices will fall, but they will be derated.
In fact, Andrew, we are getting some source-based information of who will form, or rather who will take up the crucial positions in the cabinet, and it seems like Arun Jaitley is gunning for finance minister. How would the market react if indeed he's given that post?
I think the markets, has voted already in terms of the names that you've seen, and everyone's been speculating on. I don't think there's any kind of worries whether it's Arun Jaitley or Arun Shuri in terms of who the finance minister is. I think all we're after is to make sure that the budget is a sensible budget, which will continue to move India forward, and the policy statements will continue to play on the optimism which now India Inc. has, to move forward, and that's all I think people are looking for. I don't think everyone expects the magic wand across all industries, all sectors to happen overnight, but if we're in the right direction, that's really what I'm saying. It's India's moment. if you look across the world at other emerging markets, you know, India is standing out significantly. China's got its own problems, and the rest of the emerging markets pale in significance when you think about the potential for India. And so, you know, it's a great story. And you know, as long as the new government doesn't mess up, which I don't think it sounds as though it's going to do, then you know we're going to enjoy very strong growth. But I would reiterate that our GDP forecasts of 5.5% and 7% for next year, 15-16, haven't changed, and we're unlikely to change those. So the only big call to think about now is when interest rates will fall, and we're still of the view that's a back-end second half story.
Actually, you know, that is the big worry, isn't it? At least for me, Andrew. You know, Arvind Panagaria, supposedly a man who advises the government, or at least is seen close to the BJP, has been speaking about a higher fiscal deficit as a boost to growth. Mr. Shauri, when he spoke to us, also said that, you know, keeping the deficit down is going to be very difficult. Now, Rajan's pinning his hopes on bringing down the inflation only partly on his own monetary policy. He's expecting help that the government is going to control fiscal deficit. Do you see a face-off here, and therefore an impossibility of rates falling, or something even worse, an overt battle between the two, government and RBI?
I mean, hopefully not. I mean, hopefully the new government's understood that the RBI is fighting, you know, something which is structural, which needs to change going forward. I mean, if India Inc. is going to grow and, you know, grow at the 7% GDP levels, then, you know, it has to get inflation down first. Otherwise, you know, inflation will continue to remain very high, and that will, you know, that will keep, you know, the big foreign direct investors away from India in the very short term. So it needs to be tackled. I don't think we, you know, again, we need to kind of think about a face-off between the two. I think the two can live side by side in terms of the growth strategy for India, which is more towards, you know, manufacturing, I think, going forward, and maybe tweak around in some of the, you know, the low-hanging fruit, like you know, FDI insurance and so forth, and GST, which will all be helpful going forward. So I don't see that face-off. You know, what you could have working in your favour, obviously, is if the currency remains strong or gets stronger, is that obviously is going to bring down imported inflation into India, and that gives you some breathing space to think about interest rates towards the back end of the year. But it's all about, you know, getting food supplies into India. Obviously, we have a monsoon, which is going to be important. But really, you know, I think if you ask India Inc. today, you know, do they need interest rates to come down? You know, I think they'd be more looking at where the growth's going to come from. If they can see growth, I think they'll live with higher interest rates in the very short term.
No, that's a point that Reserve Bank has been making, that high rates is hardly the reason why people are not investing. You were speaking about